Hi fellow traders, I'm making this video to explain my fundamental as well as technical view on US dollar, Japanese yen and Canadian dollar. I am planning to sell Canadian dollar versus Japanese yen again, and I'm preferring to sell Canadian dollar versus Japanese yen over buying USD CAD. Although I have made a video to set a buy limit in USD CAD. That was my last video. So I'm going to explain what is the plan and how I'm going to trade these three currencies and why I'm making such plan. So first of all, let's discuss Japanese yen. If you look at this chart, USD JPY, see this candle. This candle was caused by today's non-farm payroll, which is significantly and flamboyantly strong. Really very positive revision, positive actual, and also positive sentiment released at 10 o'clock 10 a.m. New York time. But despite all this positive data, the reaction of USD JPY to a negative news about US-China trade deal has almost erased the gain of USD JPY to more than 60% in just one bearish candle. Look at this candle. What is it implicating? It is implicating that Japanese yen is going to be strong as long as this drama is going on, and you already know that this drama is going on and will keep going on for another 1-2 months. Because I don't see any solid progress. I have already explained the previous drama in the last CAD JPY video, the sell trade of the CAD JPY. So I'm not going to repeat that. I'm now going to talk about the new things. So Director of Economic Council, Mr. Kudlow, today said that Trump is not ready for trade deal with China. He didn't mean that he is never ready, but he said that he is not ready. He means that he is not ready now because there is no deadline for the trade talk with China, as per Mr. Kudlow. But there is a deadline for implementing tariff on Chinese export to US, which was scheduled to be implemented on 15th December, and this is going to happen because this has a deadline, and that deadline is 15th December. He also said that Trump is probably going to use this implementation of tariff on China to push China for a trade deal. So all these signs, if you go back and look at the previous story, previous news coming from the White House, which I explained already in CAD JPY last analysis, and today what Kudlow said, these factors are increasing the uncertainty of US-China trade deal. And I already said that there is uncertainty in US-China trade deal. And I need to reiterate the statement that in such kind of uncertainty about global tension, Japanese yen, because it is a safe haven currency, it gains, and Canadian dollar is a risk currency, and it loses. So Canadian dollar loses. That's why my plan is to sell Canadian dollar versus Japanese yen. But why I'm preferring this over USD CAD is uncertainty of US dollar in upcoming 3 working days because of release of CPI and predominantly because of FOMC. If you have heard about recent meeting of Trump and Mr. Jerome Powell, then you know that the Trump has been pressurizing Fed chair for cutting interest rate. And there is still a probability of Jerome Powell to give indirect signal about future rate cut lurking around. I'm not saying that the next FOMC on Wednesday is going to cut the rate, but he may speak about future rate cut. So US dollar in upcoming 3 working days is a little risky currency to trade. On the other hand, Japanese yen is still safe. Even if this movement will go to the upside, after this downside movement. Maybe it will go to the upside and touch this 50% level, and then will start falling. And this will be in this kind of tendency as long as this US-China trade deal drama is going on. So better to sell CAD JPY. Now the plan is not to delete the pending order, the buy limit order in USD CAD. The plan is to keep the buy limit in USD CAD as well as set a sell limit in CAD JPY. So now I'm switching to the chart of CAD JPY. And I'm not going to talk about the fundamentals of Canadian dollar because I have already talked the fundamentals of Canadian dollar in the previous video of USD CAD as well as in the last video of CAD JPY. So you can go back and read the fundamentals that will explain why I'm bearish on CAD. And if so, going to USD CAD first, and I will show you that if I'm bearish in CAD, the importance of this is very big factor in decision of this trade. So let's go to USD CAD. All right, so okay, I will show you something on the daily time frame that will strengthen my idea, bearish idea of Canadian dollar, and it will be more significant than any bullish idea, because Canadian dollar has a tendency to erase any move caused by Bank of Canada hawkishness. What I mean to say that the recent fall in USD CAD, it means the recent gain in Canadian dollar was caused by Bank of Canada. In last 3 statements, including the event of Bank of Canada, Mr. Pelosi was not bearish, was not dovish about any further rate cut. So this was a new hawkish for. Actually, it was neutral, but it was a new hawkish for Canadian dollar. But this has already been priced in, and there is no such environment anymore in the world. If you look at all the countries in last 1 month, then you will find that all the countries took the same decision, and all of them held the rate. New Zealand held the rate, Australia held the rate, and Canada held the rate. So there is no big deal if Canada is not cutting interest rate. All others also did not cut the interest rate. So staying neutral was hawkish, but staying neutral about the interest rate is no longer hawkish. So that hawkishness, that bullishness is no longer valid in the market. That's why the new factors, new fundamental, new economic data will take over any previous environment. And even if you look at this move, look at this move, sorry, not go back. Look at this recent move caused on. Let me just zoom in the chart. Yes, October 10. So the October 10, October 11, this move was caused by Bank of Canada. So this was very significant move. Market kept falling. I mean, Canadian dollar kept strengthening for many days, but later USD CAD recovered almost all the bearish move. It shows that despite a significant movement caused by Bank of Canada, upcoming factors can take over them and can completely reverse the fall or reverse the rise. So there is no problem in Canadian dollar right now. There is no contradicting factor in Canadian dollar right now. There is clear bearish bias in Canadian dollar, and there is no upcoming news about Canadian dollar in next 2-3 days, in next 2-3 working days. That's why the idea of staying bearish still prevails in Canadian dollar. So that's it. Explain Canadian dollar, and you can go back to other videos to learn more about this bearish bias of Canadian dollar. So now switching to CAD JPY, but before switching to CAD JPY, now let's talk about the technical, because these are all the fundamental things which I talked about, USD CAD and JPY. Now let's talk about the technical. If you look at these 3 candles, Obviously these candles are made only because of fundamental, but what they form on the chart is a new technical scenario. So now the candle formed, and most probably this candle will close around this area 30 to 58. I'm not expecting a very big retracement today. Maybe retracement will take place on Monday, but not today. Not big retracement today. And if we look at this pattern, like this bearish candle, then a small bearish candle, and this bullish candle, this is making morning star pattern, which is bullish for USD CAD, and similar pattern has been formed on CAD JPY. CAD. So let me go to the CAD JPY. FX column CAD JPY. This was this was a morning star, bearish candle, small bearish candle, then the big bullish candle. But I do not trade market only on the basis of candle pattern or technical scenario. I at least look for 2-3 fundamental factors to support my technical analysis. Otherwise, I do not take any position. I'll come with another videos where I will explain why I'm not considering pound, New Zealand dollar, and Australian dollar to trade in upcoming days. To explain that I take fundamental as well as technical. But as of now, if you look at this, this is a morning star, and today it made an evening star. This is a bullish candle, small bullish candle, doji kind of candle, and today it made a bearish candle. As per classical criteria, the last candle should be closed around the midpoint or beyond the midpoint. At least it should touch the midpoint of the first candle. So it already touched and fell down below the midpoint of this bullish candle. So this is and I believe that this is going to close around this. This is not going to close above the midpoint of this first candle. So this is an evening star. Now there is contradiction between buyers and sellers. People will say, will this morning star will prevail, or will this evening star, which is going to be completed today, will prevail in the market? Who is going to be more influential? So obviously it will be decided by the fundamental things, because the chart pattern, candle patterns, all are formed after fundamental things. They are not going to cause any move. They can merely give you the technical levels. So a significant price movement is decided by the fundamental things, and precise take profit level or stop loss level or entry level is decided by technicals. So let's now use the technical. So I already explained the fundamentals, which says that this is going to fall. So let's now talk about where we are going to enter the sell position in CAD JPY. So we will switch to 1 hour time frame. I rarely use 4 hour time frame because the 4 hour time frame is not significant. Hour to hour movement gives a better idea about what is happening as per the coming fundamental factors, and then a daily gives you the idea whether or not the factor prevailed and stayed in the power for entire day. So selling is suggested at 38.2% level, but not just like 38.2 of USD CAD. Here I am taking 38.2 of the whole move down, because the fall in CAD JPY has not just been caused by today's negative data of CAD, but also has been triggered by something else which I explained in yesterday CAD JPY video, last CAD JPY video. So that's why we will consider this entire fall, and then we will set our sell limit at this 38.2 level, that is 82.226. So and besides CAD, we also have a chance in upward retracement till 15 USD JPY, as I already showed at the very starting point of the video. So that can also help the CAD can help the CAD JPY to go up till 38.2. So we will just sell it at 82.226, and then we will wait for the further movement. So now I'm going to explain the stop loss and take profit. Before I'm going to explain stop loss and the take profit, let's come back to the comparison of USD CAD and CAD JPY, what to do. So we are preferring this CAD JPY, but I said not deleting the buy limit in USD CAD. So what to do now? If USD CAD will be triggered, the buy limit of USD CAD will be triggered before triggering this sell limit of CAD JPY. Then we will split the position. We'll take half risk in USD CAD and half in Canadian dollar versus Japanese yen. But if we get the price, this price at 82.226, and before triggering the buy limit in USD CAD, then we will take the full risk in CAD JPY, and we will delete the buy limit of USD CAD, because we are preferring CAD JPY, selling of CAD JPY. So that's it. And here, very simple, we are going to set our stop loss above this point, 5-6 pips above this point. So let me measure how much pips are here on the risk. So it will be shift click, and I will point here. Alright, this will be 53.4 pips plus added a spread plus 2-3 pips extra, maximum 60 pips. So 60 pips is on the risk. And how much is the reward? Let's go to a bigger time frame to determine our take profit target. Okay, I have 4 minutes. Okay, now video is ending, and I've already explained SLTP and entry in USD CAD. So here I'll not take more time. One day. I will draw the extension. This time I'm going to take help of Fibonacci, this trend-based extension, which is also called Fibonacci extension. So if you remember my older videos, I had talked about 3-drive pattern. This and then this upward retracement had happened, and I was in buy position during this upward retracement. So that is why this first, second, and third, this entire drive is now being considered by me as A B leg. This is the CD leg, and now I'll be looking for the downward continuation. So the next target will be obviously Fibonacci 61.8% level, which is also coinciding with the previous low. So 81.359 plus 2 pips plus added a spread. This will be your target, and I already explained the stop loss, that the stop loss will be just above the recent high. This high. So that's all about the video. And if we measure the distance length of our take profit, so let's measure it, because almost 60 pips was on the risk as per the stop loss between this point and here. So let's measure the TP. So now I'll plot this Fibonacci also on daily time to measure the TP. Is it only on 1 hour? Visibility, minutes, hours. Okay, now let's plot it on the daily too. Going back to daily time frame, 2 minutes remaining. So this is 38.22. Now I'll just customize this, and I will display only 38.2, because that is where we are taking our position. So make it clutter free. Alright, so from this, let's measure it from 38.2 to this level. $85.8. So the pips on the risk were 60, not exactly 60. It was 53 plus 2 pips plus a spread. So in round figure I had said 60, and this is 85 minus something, minus a spread, minus 2 pips. So this will be something around 80 pips, or maybe 79, 78 pips, but it's still bigger than the stop loss, and this is a very nice trade setup. So that's all, guys, about USD, CAD, and JPY. And remember, if you get the opportunity to sell CAD JPY before triggering your buy limit in USD CAD, then delete the buy limit of USD CAD and go for sell of CAD JPY. Thank you for watching. Video is long, but this is how I trade. I do not just look at the technical levels and enter the position. I need many things to see. So, and you can watch the video in like you can forward, or you can watch on YouTube by increasing the speed. Okay, so anyway, thank you for watching. Any questions, then comment. Bye bye.